is 2017 going to be a good year for exits, for IPOs? Because so much excitement was built up around the Snap IPO.
Sure. I think 2016 wasn't a great year for IPOs. So you see a bunch of public investors really still thirsting for access to tech companies. So I think if you look at 2017, there's a bunch of companies that are high quality, especially on the enterprise software side, that I expect could go public in 2017.
So you're thinking more the Dropboxes of this world, that sort of element?
Well, I don't know about Dropbox per se, but I know like MuleSoft is probably going to go public in 2017. That's a great company. And so all these companies that are enabling enterprises to move to the cloud or rethinking how they do business, there's a growth secular story around them, around cloud, around SaaS. And number two, I think public investors really want to have access to this growth, and they haven't had that for 2015, 2016. So I think they're thirsty for a sizable IPO.
Mark, I just want to bring you back in, because how frustrating do you think it is that these companies like Uber, like Airbnb, can just keep on raising cash from the private markets, and they're just going to delay and delay as much as they can?
I think it is somewhat frustrating for the investors and for many of the employees who are locked up in these shares that many of them cannot offload or get liquidity to put money down on houses or to get out of this heavy amount of compensation that they've had. But Uber and Airbnb have shown this stubbornness to stay private, and as you said, this ability to keep raising and raising money. I think, as you mentioned, Snap is an interesting example of a company that seems to be, I mean, there was obviously the usual rocky first few days after the initial public offering, but it seems to have been, by many measures, a successful IPO. A lot of people are saying that it's probably more of an outlier, and they're looking more for that the other company you mentioned, MuleSoft, which is more of like a business software company, to more set the standard of opening the floodgates as some are expecting. AppDynamics was another one they thought was going to do that, but then, you know, Cisco swooped in and bought them out of nowhere at the 11th hour.
Funny you mentioned AppDynamics. Of course, that was yet another portfolio company of Greylocks. So your enterprise is going to be hot. What are the pulls and the pushes when you are talking to your portfolio companies right now about whether they come to the market 2017? Because, as we heard it, employees potentially want it. Maybe yourself, VCs want to see an exit, but they perhaps don't want to have the overbearing watch of the investor base. Not that actually Snap has managed to have that.
Well, I think consumer companies and enterprise software companies have different reasons to go public. I think there's liquidity reasons that's kind of universal. But for an enterprise software company, you're selling to other companies, they kind of want you to go public. If you're a large Fortune 50, Fortune 100 company taking a bet on some new cloud service, new application, a public stock that's A, a branding event, B, a visibility event to understand how solvent, how liquid you are, how successful you are, gives a lot more certitude around your future as a vendor. And so I think for an enterprise software company, their buyers care if you're public or not. And I think you'll see enterprise companies typically go IPO earlier than some of these consumer companies. Where on the consumer side, I think their need to go public is less related to their customer base, but more for the other reasons you just mentioned.
We're going to be discussing Snap later in the show, but I wanted to get your take on the precedent they really set. We'd seen it slightly from the playbook of Facebook and Google, Alphabet, but now to see a company list in the US with absolutely no shareholder voting rights whatsoever, is this something we're going to see again and again, or is it one-off?
Well, I think it's more one-off, right? If you look at the vast number of offerings, it's not very typical. I think there are a handful of companies like a Facebook or a Google that has the ability to do that, can do these super voting rights for the founders or for shareholders. But I think the typical listing still looks pretty vanilla to me.
And more listings to come.
More listings to come, hopefully.